Gene, as Taylor and I were looking through the story here, one line kind of stuck out at us, which is the billionaire founder, Elon Musk, would prefer to amass a group of investors who could each contribute a part of the funds because he wants to avoid having one or two large new stakeholders in the company. So again, he wants to, or Tesla, the company, wants to avoid concentrating ownership of the stock. As we were just saying between the two of us, this does not sound like funding secured the way that Elon Musk had indicated in his tweet earlier this week. Is that going to be a problem for him? And does that change your sense of whether this take private plan is feasible?
Surprisingly, I don't think it's a problem. And by the way, that was my initial reaction when I heard your breaking news, is that this doesn't seem consistent with the tweet that talked about funding secured. But I want to just take 1 minute and talk about that, is that that tweet, even though it suggests and implies that all of the funding is secured, the legal standard is that in fact is not funding. Funding secure doesn't mean all funding is secured. And so I think that there is some, if you will, wiggle room around that. And so I don't think that he should be as concerned about any legal risk. Let's take the case that I'm wrong and have, in that case, if I, in fact, am wrong, I think that it would essentially just be a fine. That's what it would be. But it would be a hit to his credibility, which is probably the bigger issue.
Very interesting. As we digest more of these headlines, one of the ones as well was that he wanted to avoid concentrating ownership of stock, which is why he was really looking to a larger group of banks or asset managers here. Gene, is that because I think he has about 20% control and he doesn't want any other investor to have a large chunk? Why does he want a broad group here?
This one is easier, and that's exactly it, is that he has 22% share. He doesn't have any super majority like some other tech companies have. But that's it. When you have these grand vision companies, the founders, the leaders don't want to have some other investor have control. So it makes a ton of sense. And I would consider this a given that he would not give up any sort of control. He's still going to be the largest shareholder in the company.
How does this fit in with what you had been thinking? Because you had mentioned in your latest report that when you look at where the money would come from to take Tesla private, it could come from a number of sources, whether it's existing investors, strategic investors, and here, of course, we're talking about those cash-rich big tech companies, or foreign partners. How do banks and asset managers fit in here?
Well, the banks don't make a ton of sense from my view, because banks typically, there's a difference between an investor and a banker. Investors tend to have a better tolerance for a lot of the uncertainty, where bankers want to be well collateralized. So in this case, I don't feel like the Tesla story lines up as well to have a leveraged buyout through debt. So there are four basic potential funding sources. One is debt, which I think is less likely, and the other three are existing shareholders, outside foreign investors with sovereign funds, and lastly, corporate investors. I think it's going to be the latter three in equity. So that piece of it surprised me.
I want to talk a little bit about how this plays into that board meeting next week. What are you expecting to hear from the board, to get from the board meeting next week? You already say there's more than a 50% chance you believe that Tesla goes private. Do we get more details on that next week?
There's probably not a lot more that's going to come out than what you're reporting today, your breaking news today. The board meeting next week, they've already issued a letter where a handful of board members had signed off that they were part of a conversation and were privy to this idea that there were other investors that were interested in taking Tesla private. So I don't think we're going to expect anything new around that. And I think it will probably be more of a reiteration that the company does, in fact, want to be private. Not that point needs reiteration, but I think that's going to be the substance of it, is you're going to hear progressively Tesla on this drumbeat that they want to find ways to bring this private. It may take a year to get there, but I think there's a greater than 50% chance they end up there.
And let me just clarify, Gina, I should make clear that some of the investors that Tesla is canvassing include large asset managers, whereas the banks are the ones they're in discussions with about these plans. Now, we spoke with Rhett Wallace of Triton Research earlier this week, and he observed that Elon Musk likes everything, enjoys everything about being a publicly traded company, except for the short selling. He likes the adoration. He likes the publicity. What does Elon Musk and Tesla lose by going private?
They lose one funding mechanism, and they can raise money privately. They can, even though it's more difficult, they can raise debt. But they lose the access to the public markets, and that obviously is an important aspect to the story. And so I think that important in the sense that cash is kind of the central argument around people who don't believe in the story, and that's going to be the ultimate problem. And so they still will have robust funding mechanisms, but you do think of it this way: if you've got 3 shots on net, now you're going from 3 to 2 shots to potentially finance if you do in fact need cash in the future.